I think the general theme is, the same has been and it continues to be for Germany in general, and I guess office in particular. I mean, stability is really the name of the game. Cash protection, as we saw, the example was given already from a financing point of view for a good property, and this doesn't have to be. I mean, there are examples in Munich, for example. You get a very good property, not a 1A but 1B or even B location. Yielding 6.5% with 15-year, 10-year great tenants, newly built, and you get refinanced at 3.5%. So you have 3% locked in for 10 to 15 years, where the Bund and the government bonds are at 1.5 or even below at times. So I think that's the name of the game. You've heard all the key themes. Hardly anything is being built, relatively speaking. In terms of speculative building is almost impossible. You have to have some type of pre-letting to get any type of financing, unless you obviously do it all cash, which still is the exception. So prices are remaining stable from a valuation point of view. Rents are remaining stable. We don't expect any big cyclical movements in this space. We've heard it before, several main cities in Germany which are dominating the investment market, but there are other markets, and in particular university towns are, you mentioned almost Mannheim, Heidelberg, Münster, those are the type of towns who have done extremely well. That's not something we as a prime office we look at, but those are these cities in terms of size that are extremely attractive for office and residential as well, because that's where the future entrepreneurs are being produced, and they usually start businesses around the places they go to university. If we had been able to get the IPO in a larger scale underway last year, we would have invested in Berlin. I mean, everyone talks about Berlin as the residential sort of capital and in terms of activity. I mean, all these places that all the people that move there and are paying higher rents, they need to work somewhere. So there is a fair amount of office stock that can be and will be revitalized, I think, in the next couple of years. So that's something that we definitely want to look at. I mean, still, Berlin, the capital of the fourth largest economy in the world, rents are very, very low, and they only have one place to go, and they will continue to rise. There's no question about it. And coming back to the question, is there a bubble there? No. I think it will continue. Maybe not at the speed that we've seen in the last 2 years, but I think it's a sustainable. And last but not least, it's not just because we're based there. I think Munich is the most attractive city to invest in, continues to be. It's the most expensive, but you have 5 DAX headquarters based in Munich. You have the 2 best universities in Munich. You have the best soccer team in Munich. And for 88 minutes, the best European soccer team too. So it's that is probably continues to be the obvious choice of investment city in Germany from an office point of view.